Welcome to Smart Wealth with Joshua. I'm Alex.
And I'm Sarah, your daily stock analysis and catalysts talk. Today we're looking at Oklo.
If you find our talks useful, please consider subscribe, like, and comment underneath. So, to kick things off today, we're looking at something of a massive industrial paradox, really.
Yeah, it's a huge one.
Right, because the largest tech companies on Earth are in this crazy arms race right now to build AI models. And these digital brains, they require just a staggering amount of physical electricity.
Like truly incomprehensible amounts.
Exactly. We're talking about single data centers drawing more power than entire mid-sized cities. The real bottleneck for the future of tech isn't silicon anymore, right? It's raw physical power.
It is, and that creates this paradox you mentioned, because these tech giants, they've all made these very public, aggressive net zero carbon pledges.
Right, they want to be green.
Exactly. But they need gigawatts of uninterrupted 24/7 baseline power, and you just can't get that by burning coal or natural gas without completely destroying those climate goals.
Yeah, and wind and solar are intermittent. I mean, they literally stop producing when the weather changes.
Right. And current battery tech it cannot store enough energy to keep a multi-billion-dollar AI cluster running through, say, a 3-day storm.
Which brings us to Oklo. They are positioning themselves as basically the ultimate solution to this energy crisis. But if you actually look at their financial profile, it is terrifying.
Oh, it looks awful on paper.
Right. I mean, they generate zero revenue right now. None. And they just reported this massive earnings miss for the fourth quarter of 2025. Their operating losses are just widening significantly, and the stock is down over 22% year to date.
Yeah, by traditional metrics, it looks like a complete disaster.
So why are top-tier Wall Street analysts aggressively labeling Oklo a unicorn? I mean, some institutions are projecting over 100% upside from its current valuation, and major funds just poured like over $1 billion in fresh capital into them.
It's wild. But to understand that optimism, we really have to look at the exact numbers that are scaring retail investors away right now.
Okay, let's break that down.
So the Q4 2025 financials, they present this textbook friction between short-term accounting and long-term hardware development. Oklo reported an operating loss of $57.1 million.
And a huge chunk of that, I mean, a really significant portion came from research and development expenses.
Exactly. R&D jumped 52% sequentially from the previous quarter, landing at $32.5 million. And that acceleration pushed their earnings per share to negative 27 cents.
Which missed the analyst expectation of negative 17 cents by a pretty wide margin.
It did. But management has been super transparent about this. They explicitly confirmed they are in a pre-revenue, blank canvas developmental stage.
I mean, I get that, but in the software world, if you're pre-revenue and losing that much cash, you just pivot, right?
Yeah.
Or you slow down hiring.
Yeah, but you can't really do that here. Oklo is attempting what the industry calls first-of-a-kind or FOC hardware construction. And they are doing it in literally the most heavily regulated industry on the planet.
So it's more like building a rocket. You burn through all your fuel just trying to escape gravity.
That is a perfect analogy. The engineering, the bespoke metallurgy, the extreme safety testing for a next-gen nuclear reactor, it requires immense front-loaded capital before you ever sell a single electron to the grid.
But with a burn rate this aggressive, how do they avoid the valley of death? That phase that just bankrupts most hardware startups before they even launch a product.
Well, the answer to that is their staggering liquidity position. Following a massive capital raise, they just reported a pro forma liquidity of approximately $2.58 billion.
Wait, $2.58 billion?
Yeah. They had $1.4 billion in cash and marketable securities at the end of 2025, and then they successfully raised another $1.182 billion in early 2026.
Oh, wow. Okay, so that completely changes the context of a $57 million quarterly loss.
Exactly. It's a fortress balance sheet.
So if we look at their 2026 guidance, they project operational cash use will be somewhere between $80 and $100 million for the year. And the capital expenditures, like the actual physical investments in infrastructure and supply chain, are projected between $350 and $450 million.
Right. So even if we assume the absolute maximum of those estimates, they are looking at a $550 million cash burn for 2026.
Which means, measured against a $2.58 billion war chest, they have roughly 5 years of runway.
5 years at maximum spend levels, yeah, without needing to raise another dime. They are totally insulated from dilutive financing. Shareholders don't have to worry about them printing millions of new shares at depressed prices just to keep the lights on.
Okay, so they essentially pre-funded their own survival. But spending $500 million in a single year, what exactly is that capital actually securing? I mean, it can't just be abstract science experiment.
No, it's not. A massive portion of this cash is being deployed to construct a regulatory moat. In advanced nuclear, the hardest part isn't necessarily the physics, it's the bureaucracy.
Because nuclear regulation is just historically glacial, right?
Beyond glacial. Getting approval to handle nuclear materials or build a new reactor design, it takes tens of thousands of pages of documentation, rigorous safety audits, and just years of waiting.
So Oklo is basically using this massive pile of cash to force its way through that gauntlet.
Exactly. And they've already secured some highly specific approvals that separate them from pretty much every other startup. Like their subsidiary, Atomic Alchemy, just got a materials license from the Nuclear Regulatory Commission, the NRC.
To handle and process isotopes.
Yes, and that's not just some generic business license. You need that for advanced fuel cycles, and it even opens the door for producing high-margin medical and industrial isotopes.
Okay, but let me push back on this a bit. Because in the tech world, a moat is usually like a network effect or a proprietary software algorithm.
Yeah.
Here, the moat is literally just, we survived the government's paperwork gauntlet.
Yeah, that's one way to look at it.
Right. So is a regulatory approval really a sustainable competitive advantage for you to bank on? Or is it just a temporary head start until, say, GE or Westinghouse decides to drop $1 billion and 500 lawyers on the same paperwork?
It is absolutely a sustainable moat because the NRC does not parallel process applications efficiently. They have limited staff and a deeply serialized review process.
So you can't just spend your way to the front of the line.
Exactly. You can't just throw more lawyers at the agency to make them move faster. They operate at their own speed, requiring sequential testing and verification. Because Oklo started this years ago, they are moving toward commercial deployment while potential competitors are completely stuck in the initial application phase.
Okay, that makes sense. And they also got those nuclear safety design agreements from the Department of Energy, right?
Right, the NSDAs. They got them for two major projects. One is an Aurora reactor in Idaho, and the other is a test reactor in Texas. Getting an NSDA means the DOE has formally reviewed and agreed on the safety framework for those specific facilities.
So all that heavy R&D spend in Q4 is actively funding the engineering data they need to satisfy the regulators. They are literally de-risking a massive 1.2 gigawatt project pipeline.
Spot on. They're turning abstract designs into legally permissible infrastructure. In this industry, permission is the ultimate intellectual property. You could invent the best reactor in the world, but without the NRC's blessing, it's just a very expensive paperweight.
Right, exactly. But okay, once they actually get all the permission, building a 1.2 gigawatt pipeline requires massive guaranteed demand. So who's actually going to buy all this next generation nuclear power?
Well, this brings us back to the AI boom. Oklo's flagship product is called the Aurora powerhouse. And we need to clarify this is a huge departure from the traditional image of a nuclear power plant.
Yeah, legacy plants are these massive, bespoke civil engineering projects that take, what, a decade to build?
It's at least a decade. And they require billions up front. And you have to build them next to enormous bodies of water for cooling.
But the Aurora is a microreactor.
Right. And instead of water, it uses liquid metal to cool the core. Liquid metal has a much higher boiling point than water, which means the reactor doesn't need to operate under those massive, high-pressure containment domes you see at legacy plants.
Oh, wow. So that fundamentally changes the economics of how you build it.
Completely, because it operates at lower pressure, it can be physically smaller. You can manufacture it in a centralized facility rather than custom building it on site. Oklo intends to mass produce these units and just ship them to wherever they're needed.
So scaling up a 1.2 gigawatt pipeline isn't about building one gargantuan plant. It's about deploying dozens of these standardized microreactors precisely where the data centers are.
Exactly. And their primary target is to deploy the first commercial Aurora powerhouse by 2028. Analysts are looking at the construction milestones in Idaho as near-term catalysts for the stock.
There's also that looming deadline analysts keep talking about, right? The July 4th, 2026 deadline.
Yeah, the market is highly anticipating that date. It's likely tied to major regulatory submissions or finalizing DOE grants. But the urgency surrounding 2026 and 2028 is directly tied to capital rotating into the industrial tech sector right now.
Because the market is finally realizing The physical limits of AI.
Yeah.
Like you said earlier, you cannot run a 1 gigawatt data center on intermittent wind power. If the wind dies down, you can't have a cluster of $100,000 AI chips just go offline.
You'd lose millions in seconds.
But, it feels like every company on Wall Street is trying to slap AI onto their pitch deck right now just to boost their stock. Is Oklo just riding a thematic hype train here, or is this a genuine physical necessity?
It's a genuine necessity driven by pure physics. The AI data centers desperately need massive, uninterrupted baseline power. And advanced nuclear is currently the only zero-carbon tech that can deliver that reliability at scale.
Do they actually have signed commercial contracts with the big tech companies yet?
Well, specific contracts remain unconfirmed publicly, but the thematic alignment is impossible to ignore. Wall Street sees that the tech sector's energy demand is going to inevitably crash right into Oklo's 2028 deployment timeline.
And that anticipated demand is what provides a speculative floor for the stock. It lets institutional investors look past the fact that they have zero revenue today.
Exactly. Which brings us to how the market is digesting this tug of war right now. Following the Q4 miss, the stock obviously sold off. It's currently trading around $60.53.
But it successfully retested a key technical support level at $56.50, right?
It did. And in market psychology, when a stock holds a support level like that, it means institutional buyers have decided the downside risk is fully priced in. They stepped in to buy the dip.
So that flush basically cleared out the weak hands. The fact that they raised $1.182 billion in early 2026 proves there's just massive institutional conviction at these valuation levels.
Absolutely. The major funds ran their discounted cash flow models on that $2.58 billion liquidity pool, and they clearly believe the core thesis is intact.
But it's crazy how wildly the analyst community disagrees on the valuation. You've got Goldman Sachs cutting their price target to $65 with a neutral rating.
Yeah, Goldman is weighing the execution risks very heavily. They see the Q4 earnings miss, the $550 million projected burn rate for 2026, and the fact that 2028 is still years away. To them, $65 means it's fairly valued given the massive hurdles left.
Right. But then on the complete extreme bullish end, you have Canaccord Genuity maintaining a buy rating with a massive $125 price target.
Yeah.
And Cantor Fitzgerald reiterating an overweight rating at $122.
And B. Riley maintained a buy with a $92 target. The analysts at Canaccord and Cantor are looking at the terminal value. They're calculating what Oklo is worth if it captures even a fraction of the AI data center market.
So when the smart money disagrees this drastically, how should you interpret that $56.50 support level? Is it a trampoline or a trapdoor?
Well, the median target among major analysts sits in the $90 to $92 range, which implies roughly a 50% upside from where it is now. For a long-term investor willing to hold through to the 2028 deployment, that support level offers a highly favorable risk-reward entry point.
Even with all the execution risks.
Yeah, which is why it earns a 7 out of 10 bullish score rather than a perfect 10. The engineering challenges are real, but the investors injecting that fresh $1 billion are playing a much longer game.
Okay, so summarizing all of this, Oklo is just an incredibly rare entity. It's a pre-revenue nuclear unicorn insulated by a $2.6 billion balance sheet, and it's using that cash to brute force a massive regulatory gauntlet.
Right, and they're doing all of it to manufacture standardized liquid metal microreactors for the AI infrastructure of the future. The widening losses aren't a failing business model. They are just the required down payment for commercializing this tech.
Which makes the institutional conviction entirely rational when you look past the short-term accounting.
Exactly. And I actually want to leave you with a forward-looking thought here. Think about what happens if Oklo successfully commercializes the Aurora powerhouse by 2028.
Okay.
It fundamentally shifts nuclear energy from being this massive state-funded infrastructure project into productized, deployable tech.
Right, like a server rack.
Yes. So what happens to the global geopolitical energy landscape when advanced nuclear plants become as standardized and shippable as the servers they power? A private tech corporation like Amazon or Microsoft could theoretically deploy its own sovereign fleet of nuclear reactors worldwide.
Wow. They could achieve complete energy independence and entirely bypass the national power grid.
Exactly. The implications for global security, for shipping enriched uranium like a commercial package, and the shift of power from nation-states to private tech monopolies, it is staggering.
Yeah, you're not just evaluating stock's potential to double anymore. You are looking at the fundamental rewiring of who controls the physical power of the digital age. Incredible. Thanks for joining us today, and we'll see you next time.